Are stocks primed for a second-half surge or a disappointing 6 months ahead? Let's ask Trivariate founder and CEO Adam Parker, NewEdge Wealth's Cameron Dawson, and Payne Capital Management's Courtney Garcia. Adam and Court are CNBC contributors. Welcome one, welcome all. All right, so we're reminded today, well, the tariff stuff's still out there. I mean, the market's not reacting all that terribly, is it?
No, not really. I mean, if you go through the details, I don't even know if anybody understands the difference between what was announced today or what was there previously, and if it will actually be implemented, and which companies it actually impacts. It doesn't appear to be the ones that are down the most. So I think it's just a little bit of selling as we got the highs and kind of recalibrating before July earnings season. But I don't think this is the sign of a new regime at all.
Well, that's the thing about, Cam, this market. It doesn't seem to believe the worst of the tariff story anymore.
Yeah, because we had the worst announcement in April 2nd. We've moved past that, and people said, at least it's not that. But you look at some of these tariff rates that were announced, they're actually slightly higher than some of them that were on April 2nd. The Japan one certainly is. So with a market trading at 22.3 times forward, there was certain amount of complacency that had set in at that valuation, which just meant that there's not a lot of room to absorb any kind of negative news.
But again, Courtney, we have, the deadline of all of this is still allegedly August, whatever. So the market is still doubting somewhat, I'm sure, as to whether it even believes that these numbers are going to be in play then. Well, so how can you place your bets on really anything too negative before we get to that point and see what's what?
And I think that's what the market is really starting to realize is these just keep getting pushed down the line. We thought that this was going to be the week that tariffs were coming in place. Now you're seeing letters are going out. You're seeing that extensions are being made. There's no really tariff deadlines that are coming. That just keeps getting pushed out indefinitely. And that's where markets are saying, okay, this probably isn't going to be as bad as we expected, at least in that first week of April, which markets have already moved past. And I think at this point, markets are more focused on almost a Goldilocks scenario, that interest rates are probably coming down later this year. Growth is actually still strong. If inflation starts to come down, I think that's actually what markets have started to price in. And seeing a pullback after such a good week last week, I think is pretty normal. But I think that's really what the markets are focusing on.
Goldilocks. You said Goldilocks. I mean, is that what we're going to have to get our arms around? That all of that stuff that everybody says was going to be bad is just not going to show up, and the environment's pretty good. Growth's going to be good enough. Earnings are going to be good enough. Tariffs are going to be low enough. Deregulation is going to be good enough. The Fed's going to cut enough, and stocks are going to go up enough.
I mean, if earnings grow 10% next year and the year after, the stock market's going way higher, okay? And we can say all we want about, tariffs and all that, but you're about to get into, 2 years of the fruits of the AI investments that were made in the previous 2 years, and you're going to start seeing some efficiencies. There's some revenue possibilities and a lot of cost cutting. So as long as you're not derailed from a dream that earnings are up next year and up the year after, it's hard for the market to go down sustainably unless we do things that are, back to the worst, 100% plus stuff with China. I tend to think most of these tariff things don't matter that much except for the China one. And so if we get anything incrementally worse there, maybe I'd have cause for concern. But right now, I just think earnings are going to grow year over year, and maybe a lot, maybe even a step change in 26 and 27, and the market will go up a lot if that's the case.
Have you turned to the point where you're the most bullish now that you've been in a few months? Is that fair?
Yeah, I mean, look, we started the year saying the market would be down and volatile with things tariffs on the price. I felt great on April 7th.
But then
Trump said buy stocks, and I didn't believe him for a few weeks. I thought who listens to the president on buying stocks? And turns out in the first half of the year, that was like the single best signal you needed to know is when he said buy stocks, you just buy them, right? And it actually wasn't a very good stock picking environment in Q2. You bought low quality, hyper growth junk stocks. It wasn't, kind of hide in the quality name. So I think maybe you can get a different kind of stuff working underneath a little bit, but I think we could be going way higher if the AI stuff starts, rearing its head.
I go back to the point, I think Adam's kind of alluding to it. It's like, fool me once, shame on you. Fool me twice, shame on me. The market feels like it's already seen this, and it knows how the ending is going to play out, and it's placing its bets. Some parts may be a little early, but it's still willing to place it because that's what the market does.